how can you save 10 years off the term of your home loan and hundreds of thousands of dollars of interest? It's really easy, Chun. Guess.
By paying more every month.
Wow, you're really good at this. How much more? If I've got an 800 grand mortgage, all right.
Average size.
Let's do a deep dive into realistic scenarios, because we can throw this in the calculator. I'll put $1,000 extra here. Bang.
Wow.
You're saving 300 grand. That's
years.
a Lamborghini, and you're doing donuts
Oh wow, love
down your
that.
cul-de-sac.
Love
You
that.
know, annoying the neighbors. But you're like, hey, I know a good mortgage broker,
Maybe we can do this faster.
mortgage advisor. Yeah, we could do it faster. Add more money.
Yeah, because I want to be driving a Lamborghini now instead of 20 years later.
Is 10 years okay?
Yep.
What about 8 years? But let's be realistic here. This is not real. This is not real, because who's going to do that?
Maybe.
Right.
Yep.
Let's think about reality. Here we've got a couple. Let's say you got 200 grand odd before tax income, 160 grand after tax for a couple. You've got a bunch of family expenses and a mortgage already. You're kind of spending 120 grand a year on expenses.
Okay.
After tax and everything, let's say you only got 30 grand spare. So you could go back to this graph and say, oh, you know what? Actually, I could throw 3 grand at it, right?
Yep.
And it'll still end up pretty decent.
Mm.
However, that's not realistic either, because you know what comes up from time to time?
Life.
Thank you, John. That's right. Life comes up. So you need to throw in things like sometimes you update your car.
Yep.
By the way, we've got some great tools here where we can go and we can do a deep dive into all your actual expenses, but we can actually think about lumpy expenses. And this is where it kind of seems to fall apart for some people, is you don't plan for these kind of, okay, you're going to update your car every now and then. You're going to have to take a holiday,
Yep.
right?
Yep,
Once
of
a year.
course.
So you kind of got to throw those things in there. And once you do that, you end up with a more realistic picture,
Yep.
which is still a pretty good picture.
Mm.
Because here you're still saving more than a decade off the term of your home loan.
Mm.
Interest savings are still pretty impressive, right? So almost 390,000.
That's a lot.
So, this is really, it's pretty much worth it, right? But where do you start, Chun?
Where do I start? By talking to a mortgage advisor?
Not just any mortgage advisor. Well, no, it's actually simpler than that. So I think when you're trying to get somewhere, right, you know where you want to get to. Let's say you got a map,
Yep.
right? And people are good at that. They know where they want to get to.
Yep.
They know where they want to get to. They got a roadmap to get there.
Yep.
But the missing piece I find a lot is, guess what the third thing is? The most important thing. Imagine you got a map, and you know where you want to get to.
Right. Where we are on the map.
Correct.
Okay.
Where you are, it's like we've done this before. We have. Haven't
We-
So you need to know where you are. So what I mean by that, when it comes to expenses, is you really need to dig deep and think, look at where it's going now. Where is your money going right now? And there are some great tools out there that can help you with that. Things like PocketSmith.
Yeah.
Some of the banks have their own graphing tools inside the internet
yeah.
banking. But you really need to look at where the money's going right now to kind of know where you're happy to compromise and redirect. That is a fruitful exercise, because, I've been going to the gym for a long time, Chun.
Okay.
I don't know if you
I
can
can tell. Definitely.
But this is the thing, right? Sometimes you go, I'm going to go and do all this amazing workout. I'm going to do this diet, and then it's like, after a month, you're done. You're tired. So you kind of got to take baby steps.
Yeah, of course.
And you can tell I'm taking real baby steps with my gym work, right?
Yeah.
Yeah. So, but it's like slow progress. But you can end up with a few 100,000 extra at the end of it when it comes to home loans.
Yeah.
Yeah. Anything else you want to say, Chun, to our viewers?
So what if all these are too complicated for a general borrower? Who can they go to?
Well, you could go to a decent mortgage advisor,
Like us?
not like us,
Oh, okay.
like someone
Yeah.
better than us.
Okay.
Sure, come on, do
Okay.
the program. But mortgage advisors are great. There's some online tools for budgeting
Okay.
that's really decent. Not all mortgage advisors do this. We've added this extra Planalytics kind of planning software in our business. It's a little bit different, but knowing how to structure your home loan, most mortgage advisors are pretty good with that.
Yeah.
In terms of doing it safely with the revolving credit and stuff, and not getting stuck with high repayments and not being able to reduce the repayments. That part you can get from most good mortgage advisors.
Okay.
But yeah, I guess thanks for watching. Me and Chun from monline.co.nz. Hamish, by the way, if you don't know me.